We are officially live. Good morning and welcome to Money Matters. My name is Nev and I am beyond excited to be here today. And boy, what a day was yesterday, which given us plenty to talk about. I mean, we have some incredibly juicy show to talk about and discuss what happened with the markets yesterday. And I just literally ended yesterday's thing of like, are we in for a crash? And then 2 hours later or whatever, the markets opened down. We've been trading down. We've been down between 5 and 7%. We didn't trigger the close button on the Dow, but we were very, very close to happen to that. So let's talk about what happened, and then let's talk about like what could today look like and what could all of this mean. And then I also made a promise that we're going to go into real estate and take a look at that. So as you can see, we have an incredibly juicy show happening right here on onedealaway.com/live. Let's do this. All right, and good morning, good morning, good morning. Super excited to have you here. Folks are hopefully doing well and thriving. And, hopefully you have been paying attention to what I've been saying. And I've been saying this is dangerous, dangerous, dangerous. Get out, get out, get out. Don't touch, don't touch, don't touch. And, like if you jumped in right after the sort of, this part right over here in early or the mid-March and stuff, and you were like, you know what, I'm going to ride this thing for a little while. Hopefully you have been doing it with protective stops so that you do not lose money. And if you don't know what protective stops are, you absolutely 100% need to learn, need to join the academy. You want to go into onedealaway.com and you want to look for the academy. That is where we're going to talk about sort of investing and trading and all kinds of stuff, having courses that are being added. We're going to be adding courses pretty aggressively over the next few months. We just finished the Crypto 101. Actually, that's a lie. Finishing it this weekend, and that course is going to be pretty much done. We're going to be going in and doing some trading courses probably, and investing courses and that kind of stuff. So we're going to be adding a whole bunch of stuff. And you definitely want to be part of it. Yeah, let me adjust my chair. So there you go. So what is going on? What is happening? And as you know, the market, I mean, you can see it right over here. Went down negative. Well, it went negative, or it went down, Nev. It went down 6.9% in one day, right? And obviously, we're still above the low of the year or the last 6 months, or however I want to look at it. But nonetheless, it was a big shock. Now, what could we expect today? Well, it's anybody's guess, right? My crystal ball, as I like to say, broke years ago. But when I see a sharp drop like this, I do expect the very next day to open up a bit higher. And the futures markets have been indicating that there's some trading on the upside, but it's not going to be anything huge. I don't expect anything to be huge. I mean, if Dow was to go up, I would probably think that it might be like maybe 1%, maybe 2%, right? So it's not like it drops down 7% and it goes up 7%. Although anything is possible, y'all. Anything is possible, because we've seen that in March, if you remember, right? Like one day we would be down, 12% down, then the next day is like 8% up, then the next day is like 7% down. You were like, oh my gosh, hold on. So we could experience that yet again. It is not unheard of, but this is what basically has happened to Dow. Now let's take a switch over and take a look at NASDAQ. This is NASDAQ 5-day. We can take a look at year to date, and you will see more or less the same thing, right? We've actually, NASDAQ has overperformed where we were at the high. So this was the high of the market previously. We've gone to that 10,000, right? And you can see this sort of downturn now. We are just short of 9,500. And we were down. Was yesterday was a down day for a little bit over 5%. But we can take a look at the day, and I mean, it just, it opened lower, it went slightly up, and then it just continued to go low. So it wouldn't surprise me if we see, and you can kind of see where we had the sort of the drop, and then it just continued. So it wouldn't see me if we open a little bit higher today, right? But then trading activity, it could stay flat, it could go down. It's anybody's guess. It's anybody's guess. But this is something that I have been, kind of expecting and warning people about for a little while. So we'll see how it ends up looking. I mean, this is the 3-month, right? So this is the March low was somewhere around, here, sort of exit of the screen towards the video. And it's been going, steadily up. All right, let's change pace and let's take a look at S&P 500. S&P 500, this is a 5-day. As you can see, it was trading pretty much, sideways. Then we had the drop, and it's been very clearly going down. There's no question about it. Let's take a look at the year to date. Again, you will see we haven't even come close to the high of the market that we've experienced. We had this super low thing in March. It's kind of come up, and it dropped, and as you can see, it was just short of 6% drop. So again, we'll see kind of how it goes. In a 3-month, again, it was climbing up. We already know that, but my fear was that we would, sort of climb up, come to some sort of top, and then go down and beat the previous levels. Now, is that going to happen? Is that not going to happen? I got nothing, y'all. I got nothing. I have no clue what exactly is going to happen. Like I said, I do expect that today might be a slightly green day. But then again, who knows? Who knows? It's anybody's guess, right? So we don't know that. And I don't want to say, yeah, for sure it will happen because, we don't know that. Now, let's switch over to see what's been happening with the Bitcoin. Let me zoom out just a little bit. And as you can see, Bitcoin basically had the same fate yesterday. So, right, it was sort of like up in the high 9,000s, flirting with the 10,000. I think you might have hit it. And then, right, boom, we've experienced sort of this drop. It's been going up now, right? So you can see if we were to switch to 1 day, here's where that drop is. We sort of did a little bit of bounce, and it's starting to come back up. So definitely an interesting piece, and one of those things that makes me very much believe. Let me see if I can do the 6 months. It follows the stocks. It follows the stocks. Now, it might. It sounds like it might sort of decouple at times, but I think when we experienced severe drops, we definitely see it in the crypto community. So there's definitely some correlation, at least right now, from what I can see, between the cryptos and the stonks, as they call them. I don't know. I heard it. That's what I call them new. So let me know in the chat of has Nev lost all of his marbles? Or, if you're watching this on YouTube because you can't make it to the live session, I understand. But again, you might be missing things because, we're talking about a lot of things. And sometimes you got to get things before the market's open, before everybody else reads about it, before it becomes the news. Because then you have an ability to get before the market, meaning that if you are bullish or on the upside of it, if you jump in before everybody else, the crowd kind of carries you up and it helps with your returns. If you are towards the end, well, you're getting in, basically here, and then you're riding that puppy down with everybody else. So since we're talking about riding puppies up and down, and I have been on this kick with Hertz, and by the way, for the record, I don't have anything against this company. It's just been fascinating to watch what's been going on in the market and sort of the behavior, the human behavior when it kind of came to some of these things that are happening. I'm using it as an example, not looking to beat up on them, but because we've been doing a lot of sort of viewing on it, I wanted to really take a look at sort of like, hey, let's use this as our case study, right? So please understand, I don't have anything against Hertz. I want every company to win here, okay? Especially if it's a good company, morally, ethically behaving. Although, sometimes it's questionable with some of the stuff that we've seen with Hertz. But, overall, I don't know that I have anything against them. I mean, I've rented cars from them before. I haven't had many issues with it. Sometimes you get like a stinky car that hasn't been cleaned properly, but they've been very good about, you bring it back, they exchange it. So, I don't have anything against them at all. Where my fear comes in and what I am against, so to speak, has more to do with what the individuals are doing. So let's take a look. This is an FT report, so Financial Times, and it's talking about something very unusual that Hertz is looking to do now. And they want to actually roll out brand new set of shares worth $1 billion to basically help them while in bankruptcy. That's unheard of. I gotta hydrate. So this is insane. Typically, when a company is in bankruptcy, they typically, if they need money and stuff, they might go into the senior debt loan or something like that. But Hertz is doing something unheard of. And who knows, it could be a very good move, and it could be like the brand new thing that is happening, right? Like the new normal, as they call it. So let's read about it. Hertz, the car rental group facing bankruptcy, is looking to sell up to $1 billion in stocks to take advantage of frenzied trading in its shares. In an unprecedented move for a company whose solvency is in doubt. The proposed cash infusion, outlined in filing on Thursday, would help fund the company's reorganization process and would come in lieu of the trading senior loan tapped by most companies in Chapter 11 proceedings. So let's take a look over at Hertz and kind of what's been happening with their stock. So this is Hertz Holdings. As you can see, they were down. This is, what am I looking at? 5-day. Let's go into like a 1 month view. So you can see that they were, 59 cents, I think, was the lowest. I think that was the day, May 26th, that was the day when they filed for bankruptcy. Then it kind of went up. It traded sideways, but with a downward trend. Can you see it? Let me see if we can zoom it in so you can see it. I want to make sure that y'all see this. There we go. Good. Yeah, much better. Okay, so you see kind of how it was down. Then it sort of went up. Yeah, it was up and down and stuff, but you can see a gentle downward slope until early June. Then, boom. I mean, it just exploded. It went from, if we take a look at June 3rd date, it was 82 cents. It exploded and it was like $5.50. That's a huge jump. In what has transpired. Of course, then it dipped, it went back up, and then it has been going down. And then if we take a look at the 5-day, right, you can see this 554 or 560. Then it kind of went and it started to go back down, sort of leveled off. And then yesterday, of course, it's been in a $2 range. So we'll see what it looks like. If we look at the year to date, I mean, it used to trade at 20. If we look at the max, I mean, this puppy was like in the 40s, and it's been down, sideways, down, sideways. So if you pay attention to that, that also tells a story as well. Now, here's what they're basically saying. When we look at Yahoo Finance, the performance outlook, they're saying, yeah, we're bullish short term, 2 to 6 weeks. Midterm's down, long term is down. Earnings per share expected to be negative, right? I mean, it doesn't, to me, again, it doesn't make sense. And, they're saying it's overvalued, right? You can see it right over here. Hold on, sorry. I don't mean to trigger the pop-up. But you can see it right over here where my mouse is, where the thing keeps popping up. It's overvalued. So, that's sort of the part that is interesting. And so for me, it's, who's been going in? And Wall Street Journal had done the review of sort of who is actually jumping into Hertz, like what's happening. They're saying, like, look, Hertz is too risky for investing icons like Carl Icahn, right? and some of the major investors. But for regular humans, hey, Hertz is the greatest thing ever. So what was the report? And I had tried to pull it up. And my apologies, because I had attempted to pull up some of these photos. Hold on. Did I do this? I did. Yeah. Okay. So let me see if I can download some of these photos and see if I can show it to you. If I know how to show it to you. So let's see if Nev knows how to do this. We're just going to go into the desktop view, and all right, so you should be able to see it. So I couldn't pull up the Wall Street Journal report for y'all on the page. Don't ask why, but hopefully you can see this. And let's take a look. I took an image from the phone when I pulled it up this morning. Mr. Gerber, the Seattle electrician, said that while he isn't a huge sports fan, the paucity of the live games have given him more time to trade. I do not necessarily miss sports that much because there are other things that entertain me far more, i.e. the stock market. This is the kind of enthusiasm that has some market observers worried. In the late 1990s, small investors chased flimsy companies with .com attached to their names, buying that came after the Fed slashed interest rates in 1998 amid a financial crisis. In the spring of 2000, the Nasdaq market collapsed. The key parallel between 2000 and today is that retail investors are seeing the stock market as can't-miss opportunity. And I absolutely agree, y'all. This is the part that scares me a lot. Like, it's this stuff where people are going in and they're gambling. They're literally gambling because they don't understand what is going on. They are jumping in, and their reports, let me see if I can find another image for you. There are reports that are basically saying, hold on, I'm trying to see if I can find it. These are like mismatched. I took a picture in order when I emailed them to myself. It's not showing up in the same regard. But maybe I can find this for you. But part of it for me is that it's the whole thing of there you go. So let me share this, right? This is the part that I wanted to share with you. Hold on. No. Wrong thing, Nav. We got this. All right. Let me lower this and let's take a look. Right. So Hertz was too risky for Carl Icahn, but not for Corey Gerber. Now, Corey Gerber is an electrician, right? He's a 29-year-old electrician, and he decided, like, hey, I can't miss on this opportunity. I'm going to jump in. Folks, when you jump into something that you don't understand, you are basically, going in and gambling, literally gambling with your money. And so people, as you can see, people are going in and saying, the people are saying like, hey, but the stock market is only going up. You can't lose. This is the greatest game ever. Well, it's not. And there is a way where you could potentially hurt yourself badly with this whole thing. So we'll come back to Financial Times News. I want to jump into this particular article where you may not know, and people that are jumping in, they're not doing evaluation. They don't understand what technical analysis is, nor how to read the charts. They don't understand the fundamentals, nor what does it all mean. They're literally betting and hoping that things are going to go up. And when they don't, they're going to get badly hurt. So Hertz is actually, New York Stock Exchange is delisting, is told Hertz that they're delisting them. Now, Hertz is fighting that, and they're going to appeal. We don't know what that is going to look like. My understanding is today or maybe next week, there's going to be sort of the final piece. But what does that mean to you as an investor of when the particular company gets delisted? So let's read about it. Let's study. This is important. And hopefully, folks, you are reading this, you're studying this. If you don't want to pay to invest, you will pay when you invest and lose money. Okay? Because people are going in and saying, you can't lose. Stocks are only going up. So everybody's long. Everybody who doesn't know what they're doing, everybody who knows what they're doing, they're not in the market. And if they were in the market, they were in it short term with the stops, and they pulled out. I won't lie. I after the lows, I jumped into a handful of stocks, but I sold them 2 days ago, 3 days ago. Okay, I sold them. So the carnage that happened yesterday, I wasn't part of that, because I looked at it and said, this is crazy, right? When you have shoe shiners and electricians and people who are bored out of their minds going in, and they're basically using the stock market to entertain themselves, that's the time when and on top of that, then they go on to the social media and on Twitters, Facebooks and YouTubes and all of that stuff, and saying Carl Icahn is an idiot and Warren Buffett is an idiot and I am the new genius. You have total of 5 minutes in the markets. These people have 50 years plus. And I'm not saying they're always right? And I'm not saying I'm always right. I've been wrong more times than I care to mention. But perhaps they're seeing something that you're not. Like, it's called being humble. Let's learn from people who got burned in the fires and in the crashes to understand of how to protect ourselves, right? But people are not, people are jumping in. So anyways, let's read about this. Enough about my commentary. Let's learn. Okay, so what happens when the company goes bankrupt and gets this list? So if you're feeling confused about the roller coaster that has been Hertz, you're not alone. It has been notified by New York Stock Exchange that it will be delisted. When a company is delisted from one of the major stock exchanges, nothing directly happens to a shareholder. Investors still hold the same percentage of the company and the same amount of the shares that they owned prior to delisting. However, the stock becomes less liquid. In the stock market, liquidity is actually in anything. Business, investing, trading, liquidity is the key. When there's no liquidity in the market, what that means is that when you want to go sell it, there might not be anybody to buy it. That is the problem with delisting. So you still hold on to the company. If the company does great and they could potentially get back and listed in New York Stock Exchange, great, the liquidity picks back up and, potentially you can make money. However, if the company gets delisted, so say you're holding to 100 shares of Hertz, for example, right? And 100 shares of Hertz, you're holding on to it, they get delisted, the price goes from the $2 or whatever it was today. Let's take a look again. $2. Okay, $2.06. So the price goes from $2 and it goes to say back to 50 cents or to 20 cents, right? And you're like, oh my gosh, like I can't afford to do this. And you try to sell it, but if there's no liquidity, meaning there's not enough people in the market, you can't even sell it. So liquidity is incredibly important when it comes to stocks, when it comes to crypto, when it comes to business, when it comes to real estate, all of that stuff. It's very, very, very important to it. Cash is the blood life of anything business and financial. Okay, liquidity. You have to have liquidity. Now, it is important to know, when a company files for bankruptcy, the shares are generally delisted before the bankruptcy process ends. If new shares of restructured Hertz are issued post-bankruptcy, okay, the shares that exist before bankruptcy likely will end up worthless. So what does this mean? Let's talk about it. Let's discuss it. So you have the new minted shares, right? So they go in, they get delisted. You can still do OTC, over the counter, but again, much less liquidity. So you're holding on to something that has a very high potential that it will become worthless. Okay, because when they go through the proceedings, when they restructure, if they're allowed to restructure, if they're able to sort of survive, if they don't have to, liquidate stuff, then what they might do to basically get what they might do to get new investors in and to get back onto the New York Stock Exchange listed and so on, to become one of the majors yet again, what they might do is issue new shares of stock. When that happens, if you're holding the old share, it literally goes to like zero. It means nothing, like you basically lost all of their money. Thank you very much for playing. Goodbye. That's what happens, okay? Hertz has a massive $19 billion pile of debt, and a large $15 billion chunk of that debt is owned by lenders with asset-backed securities. Hertz basically borrowed from lenders to purchase much of its massive vehicle fleet, and now when they go through the restructuring, if they have to sell because lenders are holding to this hard assets, meaning the cars, they're going to force the sale of it. Okay, if they can get money, they're going to force. They have a legal right to force the sale of it, meaning that the used car market is going to plummet. So they're going to get whatever they're going to get, and those lenders are going to get basically much of whatever value Hertz liquidates. So if they can liquidate 100 cars at $1,000 a car, right? That money goes to these people that are actually holding the debt that is collateralized, meaning that it basically is based off of that vehicle. Okay. Now, what happens to you as the stockholder? Common shareholders will be very last to receive any value, if any, because remember, vast majority of their debts is being held by these people who actually, or the companies that have a right to force the sale. Let's jump back into Financial Times and continue learning of what they're actually doing, so that now you understand of kind of where we are and the danger of what people are doing without even realizing what they're doing. Okay. The proposed cash infusion outlined filing Thursday would help the company's reorganization process and would come in lieu of the traditional senior loan tapped by most companies in Chapter 11 proceedings. Hertz shares reached 5.53 on Monday, implying a market value above $700 million, even as its bonds were trading at highly distressed level below 40 cents on the dollar. At such levels, the stockholders are typically wiped out. Okay, so you can see what's happening. Here is Hertz, the blue line, right? And, it filed for bankruptcy, it went down, and then it just surged up, and nobody can freaking explain why or how. Well, we can explain how or why. It just doesn't have any fundamental reason nor technical reason of why you would want to do that stuff. Okay? Now, what they're basically saying, a filing to issue a new stock would include a disclosure stating that an investment in Hertz common stock entails significant risks, including the risk that the common stock could ultimately be worthless. One veteran lawyer following the situation believed a gambit was unprecedented, saying that he has seen nothing like it in his 30-year career. Hertz is in bankruptcy trying to sell stock, and at the same time is saying they can't afford leases on its cars. Doesn't make sense. Yet, Robinhood jumping in. And I will tell you, Robinhood makes it super easy to do it, right? All you need is one of these puppies. You go in, boom, click a button, and you buy it, and it's done. The problem is that their charts and graphs and stuff are crap. Can I say that publicly out loud? I'm sorry. I don't usually say that. But they're really bad. It's like, it looks like this, except it's not even like this. So it's very limited as to what you can do. You can't do much of a research. You can't do much of anything except buy. It is built for dumb money. It's built for dumb money. Now, if you know how to go into these things and you go into, place like TradingView and that kind of stuff, and you know some analysis and you read on the fundamentals and take a look at the technicals, and then you jump in to buy it after you've done the research, cool. But most people are not doing that. They're sitting there with the phone, swipe, right? And then what ends up happening is that they're click, buy, because they're going in and saying, you can't be wrong because market always goes up. No, it doesn't. Okay? Bonds are telling us that this market is going down. Now, I don't know if that's, if this is the start of the new leg down. I don't know if that's going to happen, a month from now or in November. I got nothing on that, right? Like the timeline, I don't understand. What I do understand is that you cannot have a ridiculously high stock market, up and up and up and up, without economy and fundamentals and all the other things. And all of those things are screaming bad times, okay? So, shares in Hertz lost 4/5 of their value after the group filed for bankruptcy, but recovered after a wave of retail investors, Robinhood, in the downbeat stock. The stock has sagged by nearly 2/3 and closed Thursday at 2.06, right? So this is yesterday. This is the price that we just saw. Still far above the 56 cents it hit last month. Other distressed companies, including JCPenney, Whiting Petroleum, and Chesapeake Hertz, experienced a similar volatility. The phenomenon, okay, I didn't highlight this, but I think it's important to read it. The phenomenon has confounded Wall Street portfolio managers and has shown a spotlight on the stock market speculation among retail investors that has helped fuel the market rally since late March. Hertz is now one of the most held stocks by users of Robinhood. Number of users owning the stock on the platform has tripled since the car rental group declared bankruptcy. Very similar dynamic that we saw was in Bitcoin and what we saw in dot-com boom and bust, right? And when I say the dot-com is basically when they're talking about that 2017, 2018, when dumb money goes in, they ride that puppy in and then it just slams it and they lose because they buy at the top. Same thing happened at the dot-com boom and bust, okay? The activity reflects a sense of buying anything that is down during the coronavirus in expectation, and I would argue hope, that these stocks won't go bankrupt. People are going in and buying basically, and there's all kinds of stuff, right, that is happening, right? I mean, you can see it. This is silly. This is silly. But people are going in and they're literally buying on the hope and because of FOMO, okay? Fear of missing out. They're seeing other people reporting and saying, look at me, I'm a genius. You know, Buffett is stupid and I am smart. But we'll see. You know, when there was somebody that said, I can't remember who it was, but they said, you know, like when the tide pulls back, we'll see who's swimming naked. And I'm afraid we're going to see many, many, many naked people. I don't know if I want to see that. Okay, all right, so it's time to change because I promised that we're going to go in and take a look at real estate. And so let's take a quick look at what's going on in the real estate market, or actually better yet, why don't we go live later on today? Let's do it this afternoon again, because I'm looking at the clock and it's you know, we've been recording this, we've been going live for a little while. You know, it's been about 40 minutes, and I think that people might not want to watch this. So let's go live this afternoon. How is like 2 p.m.? Let's do 2 p.m. Eastern Standard Time, right? Let's go live at 2 p.m. And you know, right here, same bad channel, same bad me, I guess. So onedealaway.com/live. Let me quickly share with you what we're going to go over. So we're going to take a look at sort of what's being posted about the listings in Sacramento region. We're going to take a look at the structure of the mortgage rates. We're going to be talking about the potential housing apocalypse that is coming, as well as sort of what the delinquency rates have been. And we're going to look at the housing market. Is it rebounding? What happens? And all these different things. So why don't we do that? Why don't we, you know, I know y'all got to go get ready to, you know, make breakfast, shower, go work out, get ready to go to work. Even if you don't have to commute to the office, you still got to go in and report in. And potentially, maybe you want to act on what we just learned about the stonks, and sort of pay attention and go and protect your money. And again, if you don't know how to put in protective stops and how to do some of the trading and analysis and those kinds of things, I highly suggest you join One Deal Away Academy. You know, it's ridiculously low price, and you can cancel anytime. It's basically month to month. There's no long-term commitment whatsoever. You can, you know, you get to try it out for 7 days absolutely free, and then, you know, if you don't like it, you cancel within 7 days. You don't get charged. So anyways, so let's come back. Let's do this. We're going to end this for YouTube. So YouTube, if you're watching this anytime, from like 8 a.m. New York time, or whenever it gets posted, the replay, all the way through 2 p.m. at 2 o'clock Eastern Standard Time, we're going to go live today again at onedealaway.com, and we're going to look at the real estate market and what's going on. So thanks for watching. Make sure you subscribe, make sure you share, make sure you hit that bell button, and make sure you come back at 2 o'clock today, where we go live yet again to talk about what's happening in the real estate and how you can benefit. Until next time, stay forever money blessed, and do remember, you are only one deal away. All right.